Welcome to Illuminati Silver. We tell the truth about silver. Today we're talking about an intriguing development. Why central banks are hoarding gold and what it means for investors in 2024 and 2025. Central banks worldwide have been quietly but consistently adding gold to their reserves. In 2023, this amounted to just over 1,000 tons, with the People's Bank of China and the National Bank of Poland being the largest purchasers in that year. So why the renewed interest in gold? And how could this impact the market for individual investors? Stick around to find out why central bank decisions could make this year a pivotal year for gold. Let's start with the basics. Central banks from countries like China, Russia and India, as well as several emerging markets, are rapidly accumulating gold reserves. Last year's 1,000 tons of gold purchase set records in the precious metals market. This surge in buying is driven by rising concerns about economic stability, long-term inflation, and a strong desire to reduce reliance on the US dollar. This is in addition today of reducing interest rates and therefore the opportunity cost of buying gold. What makes gold so attractive to central banks? Well, first, gold is a universal store of value, independent of any single currency or economy. In times of financial instability or inflation, gold preserves purchasing power, unlike fiat currencies, which can devalue over time. Additionally, in today's market, gold is seen as a hedge, not just against inflation, but also against larger economic downturns and potential crises. Central banks are increasingly concerned about several factors. Although interest rates are stabilizing and even beginning to decrease, persistent inflation and high geopolitical tensions remain a concern. The Middle East is currently experiencing intense turmoil, while the Russia-Ukraine war shows little sign of a resolution. These factors add pressure on central banks to hold more gold, safeguarding their reserves against potential downturns and currency devaluation. Another driving force is the desire for independence from the US dollar, which dominates global reserves. Gold offers central banks a way to diversify their holdings, reducing dependency on the dollar's value. So, this trend represents not just a quest for security, but also a strategic positioning on the world stage. But why should individual investors care about central bank actions? For one, central bank buying increases demand, which generally supports higher gold prices. When large institutions buy heavily, it signals confidence in gold, often influencing market sentiment and driving private investors to consider gold as a viable asset. If central banks see value in gold amid inflation fears and economic instability, these same conditions can impact personal portfolios as well. Gold has historically acted as a hedge against inflation and currency instability. Investors may consider holding gold to provide a layer of stability to their portfolio, much like central banks are doing. Now, with gold currently at all-time highs, the big question is it too late to add gold to your portfolio? While high prices may seem intimidating, it's essential to look at the long-term picture. Many investors see gold as a safety net, one that holds its value over time, regardless of temporary price fluctuations. Even at all-time highs, financial analysts suggest that we may still be in an early phase of potential growth, especially if inflation and certainly geopolitical tensions continue. Central banks buying at these price levels indicate that they believe in gold's potential for appreciation and protection over time. Private investors, this could mean that adding a small amount of gold now as part of a diversified portfolio may provide valuable security, even if prices fluctuate in the short term. As always, each investor should weigh their financial goals, risk tolerance, and long-term outlook before making a decision. While no investment is guaranteed, adding a modest amount of gold could offer that additional layer of security that central banks are currently seeking. To sum up, the fact that central banks are hoarding gold could have significant implications for both global economies and individual investors. With traditionally persistent inflation, currency concerns, and rising geopolitical tensions, gold's role as a safe haven asset is strengthening. So if central banks are betting on gold, should you be considering it too? There is another dynamic also to take into account. That is predicated around a scenario where there is a run on a currency and/or a breakdown of internet systems, either caused through hacking or a global crisis. In other words, a SHTF scenario. Physical gold and silver are sufficiently portable to trade, and is another reason for private investors to consider its acquisition as part of an overall investment portfolio. Thank you so much for watching. If you found this video helpful, please like, subscribe, and hit the notification bell. Tell us in the comments if gold is part of your investment strategy for 2024 and why. And also, please do not forget to check out our sister channel, Finances Do Matter, and we've placed a link to that channel in the description and comments section below. Finally, please also check out our recent videos, the most relevant of which we have also placed links to below. These focus on gold and silver, including, if it is possible, we could be in store for a silver squeeze Mark II. That one is particularly of interest to those silver bugs out there, or new investors into precious metals who perhaps at the moment cannot afford the much higher price of gold. So let's look forward to a prosperous week, month, and year ahead by investing in precious metals.